StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer, Brian Johnson. Markets moving their way up the last couple of days. And the last time we did a video, it was on Monday. So we have to cover a couple days worth of information here. And today, not bad. Internals looked all right. They weren't fantastic, but they did confirm what we were kind of watching today. The Bulls still just refuse to let the Bears take over here. Keeping this thing in what is really ultimately just a big, well, not a big, but just another yet bull flag. I guess it's a pretty big bull flag and goes back to about the beginning of May. Just still no change on the home front. So we saw some really good trading here the last couple of days. If you were following along with some of the stuff we like to trade, Apple, FAS, FAZ, those haven't been too bad. Even the indices themselves have been really very easy to trade the last couple of days. Two very, very nice days of movement since Monday. And today bringing us right back into, yet again, overhead resistance. So this is the place where the bulls have tried once, twice, maybe even, well, about 3 times now, maybe even 4 times if you want to call this area right up here around this 12,650-ish area retest, pretty close. They've tried 4 times, have not been able to penetrate it, but still looking good from a bull standpoint, waiting for that push, watching for this 50 right here, this 12, I called out, 12.5. I think on Monday, I'd have to go back and look. I think 12.5 was my entry for you guys then. 12.6 is another good entry. If you're looking to maybe try to sneak a little bit of a long play in here, see if the Bulls can't get this thing back up and running again and into what I think might be potentially 5th gear, if you will, for the markets if we make one more push to the upside. If we do, I'm looking at more highs. So eventually back up above this area before it's all said and done with. Starting with this move right down here. We'll see if the Bulls can't get that going or if the Bears are going to try to pull it back under. The biggest caution for me was now breaks and closes below that 20-day moving average. Last time we did that, we didn't stay there long. We were below it for a day, back when within 2 days, back above it. You can see we've been back below it now for at least 2 or 3 days. With another potential approach coming up. So this is going to be the area to watch on any break up and over that 12.6 mark. Will it give way here on the 20-day moving average? The Dow, being stronger lately, has done a very fine job of holding up compared to what some of the other markets such as the NDX or the NASDAQ have been doing. This holding very, very nicely in here. And once again on a daily looking very clean as a bull flag. So we got it back here. This was a bull flag back here. It was kind of ugly in the way it was, in the way it kind of worked itself out, but the information was there. It was just a bull flag. This is looking much the same way right now. The bigger area and the more tough area that the Bulls are going to have to penetrate will be once again these moving average starting with that 20. That will be so crucial to them coming into the end of the week to try to get up, and they don't have to necessarily break it, but to at least get back at it. That's terrible grammar. Back to it. There we go. It's better. If they can get back to it and hold, much, much, much better opportunity for the Bulls to try to take that a little deeper coming out of the weekend and into next week. The way the Bulls like to leave things too, and the markets love to leave things, they love leaving Fridays in limbo. So I would not be surprised to see us close right at those 20-day moving averages and leave you wondering, what do I do over the weekend? Do I stay long? Do I get short? Do I not do anything over the weekend? If that's the case, let me just tell you guys to be very cautious. Cautious is always the best choice. Always the best choice. Just stay flat over the weekend. You can always re-enter come Monday. So if you're ever in a bind, don't worry about the couple of points you may or may not make on your trade coming into the next week. You're much better off to be able to relax mentally and to save your money coming into next week and live to trade another day, if you will. So if you have any qualms about where things are at on Friday, what to do on Friday, just go ahead, just get out. Stay out of the position. Try to re-enter again on Monday. NDX showing you here the bigger dip that we saw coming down in and below these levels here, only to come back up into the 200 period moving average by the time the day was done. Really The Nasdaq trying to make a move. Now, if we look at the daily here, remember how much deeper the Nasdaq had got than the other indices, and look how quickly it reclaimed all of the lost time. It did not take long. It did not take long. So jumping very quickly to the upside here, maybe we see the same type of action. It has been kind of the laggard lately. Some indication of what we might be looking for down the road, but you know what? Down the road is exactly that. That could be a week, could be a day, it could be 3 months. So we play what the charts are giving us. It will still have to deal with the 20-day when it gets there, and it's got quite a bit of other overhead resistance it's going to have to deal with. But look what it did with all the other stuff above it. It just gapped in a big way back up and above these levels. We start to see this happen in the NASDAQ. I would be very certain that the rest of the markets would follow that kind of action. From a weekly perspective, too, holding the 20-week moving averages, getting below it, but so far has not closed below it. We do have a couple days left in the week, so we'll revisit this come Friday, but notice how the bulls love to buy at these lower levels, trying to protect that 20-week moving average. SPX 60-minute also in what is just a big bull flag here. Got a level up above here, got some levels here you guys could jump in at if you wanted to try to get some trades. But what we saw today was a very nice move by the bulls up and into these overhead resistance levels, holding sideways before breaking through at the end of the day. And the day breaks are always difficult to manage. See if you want to get in or stay in overnight, but it is what it is, and this is a great break. 2,250 all going down by the time the day was over with. From a daily perspective as well, we put in that nice hammer candle yesterday, got good confirmation on it today as we break back to the upside. Once again, 20-day moving averages. Very, very important, not only to the formation itself, but to the markets and the bulls. They need to reclaim that area. Very important for them to not only get above it, but close above it. Then we may start to see that strength come back into the bull side and on to higher highs as we could then break that 1370 level. VIX on a daily falling back down, holding nicely to this line that we've been watching. Overall, it's all sideways. You know how I feel about the VIX. And that is not getting above nor closing above the 19 or 20-ish area. We did one time this week. That was Monday. We did not close above it. We did touch above it. And you can see straight down since then. Lather, rinse, repeat. Big moves up in the VIX have led to nothing but days of complacency following. So we move up, markets move down, markets move down, VIX goes down. It's just kind of, it's been very odd. We've had some very, very odd action in the VIX, but it is what it is, and that is back into complacency levels. Right back here in the 16 level is not really all that worried about things right now. That's exactly what that means right here. Apple 60 minutes saw that break down to the downside, had that great trade below the 345, 344.50 area, which led to huge profits. Had a nice underneath target here of about 332 to 330. We did not quite reach the 330 mark, but close enough, 73 cents, then giving us a huge move to the upside. So if you know how to play this, you caught a very, very nice move the last couple of days. For some of my students, I have kind of a daily chat room where I kind of pop in and out of. And my call down for them was right around the 332, 332.50 area to look for a reversal. We got a little deeper than that, but still a great trade from that perspective, giving us now about a 7-point trade. So it's been a very, very nice move back up into overhead resistance. This overhead resistance was not on our charts as of Monday. This is a line I moved yesterday. Worked very well today. So the 2-3 times a week I know is a little bit more difficult to follow. This move would have been very difficult unless you knew what you were doing to kind of make these trades. But Apple's seen a very, very nice bounce, and showing it from a daily, you can see two very strong moves back to the upside, reclaiming some of this lost area. But guess what? Still having to deal with the 50 and the 20 over the next few days if it decides to push itself back up again. A lot of work to be done here by Apple because there was a lot of damage done over the last few days as we saw the drop down and through these heavy, heavy, heavy support areas. From a weekly as well, it's going to try to reclaim that 20. We get any kind of bullishness into the end of the week, Apple's going to play along. Matter of fact, Apple doesn't even have to wait for the other indices. It a lot of times has a mind of its own. We saw that break and close last week. I said I'll give the bulls a chance to try to reclaim that area. That area is 344. So be very curious to see if Apple doesn't try to make a run at that area before Friday finishes. Be watching for that very closely if you are an Apple trader. FAS went into a very nicely packed falling wedge. I love, love, love wedgies. Those that follow me know this. This one was beautiful. Beautiful breakout over and above this area. Led to some very good opportunities to trade this thing long. Unfortunately, it happened yesterday into today. So without the video being done every day, just something else you guys would have to have maybe seen on your own, something you would have followed on your own. So the break was beautiful, absolutely textbook. Students of mine, those that have been through the mentoring course, saw this. It was very, very clear. If they were following the stock, this was a very, very simple, easy trade to take and make some profits on this. Looking for further pushes up and over these areas of 28.50, 28.60 before you start looking for your next entry to the long side, keeping in mind the $29 area, which was one that we had been following for quite a while. Breaks below 29 were the short. Now looking to see if it will hold on any retrace. As you can see, that will also be the underside of this triangle that we followed forever. For a very, very long time we followed this thing, all the way back to March, actually. We did not know it was the start of that, but the consolidation was more than clear by the time we hit the April or so time frame. And you can see how the triangle has played itself out. Did break to the downside, now looking to see if this lower line will hold on any kind of retest. FAZ, for those of you in Canada or across the sea. I can see that we are looking at this lower line as support 41.50, as it were, on the 60-minute chart. Breaks below that, $41. Breaks below that, could get into the $40 mark. So they want to watch that very, very closely over the next couple days and see if these breaks do happen within the financial system. Here we are, added a line to the top side, looking at the triangle. Remember this triangle we followed here? Loved it. This was a very, very beautiful trade on FAZ. Just a pretty formation to follow. Got that break, took it to the long side, made a little bit of money. Didn't break quite as high as I would have liked to have seen it. I would have liked to have seen it get up and over that 44 mark into this overhead resistance level. Should be out of it if you are long. Want to be very cautious now. Strong support back at the moving averages and this blue line. They're all converging here. So any push back into this $41 mark? Yep, right around that $41 mark should act as very, very strong support. Keep that on your charts if you like to trade the FAS and the FAZ. All right, that should do it for today's video. Giving you some new levels, some new things to watch. If you enjoy the dailies, you'll love the subscriber videos. Way more lines, way more indices, way more stocks, just way more of everything to follow. And for $1 a day, it's way worth the information. I've kind of tuned into some of these newsletters that are $80 a month plus, and God love them for getting that kind of money out of their subscribers if they have any. But I'll tell you that they're not giving out any more information than what I'm giving in my videos. That's for sure. Matter of fact, a lot of the cases I've seen lately, it's less information than what I give in my subscribers newsletter, and it's not as often, and they don't do intraday updates, and it's just not there. So I really do feel that is definitely a good value for the price. And give it a shot and see what you think, but I think you'll agree once you get into it. All right, that and the mentoring. I'm setting up my mentoring schedule for the end of this month into June. If you have been interested in it, please get back to me if you are still interested in that. If you want to know more about it, give me a call. Let me know. We'll see you again on Friday.